Hello, everybody. As you know, in the European Union, the sustainability agenda is driving industrial and economy strategy. In 2020, the European Union adopted the Green Deal, an industrial strategy that commits to the sustainable transition of the European Union economy. To oil the wheel of this transition, the European Union has decided to reform corporate reporting such that sustainability reporting, that is environmental, social and governance reporting, assumes equal prominence to financial reporting. From EFAA for SMEs, we are leading this process to inform and to help our professional accounting organization members and their small and medium-sized practitioners to understand new standards, requirements, scope, contents of the reportings and things like that. For those reasons, in this video, Esther, Ortiz, Paul Thompson and I will share what the future of company reporting look like for European companies. Consider the implication for Euro's small and medium-sized practice, and close with some suggested next steps for this professional accounting organization and their SVP members. Paul, please tell us a little bit about the evolution of sustainability reporting in the European Union.
Sure. 2020 was a momentous year for corporate reporting, and it was perhaps the most momentous since I started out as an accountant way back in 1985. In 2020, we witnessed the widespread recognition, at least here in Europe, that non-financial reporting, or NFR, or what's now perhaps being more appropriately called sustainability reporting, represents the future of corporate reporting, and that there is a need for robust regulation and standards, just as we've had with financial reporting for many years. Europe's come to that recognition sooner, perhaps, than the rest of the world, signalling the initial shift from market forces to regulation. Around about 5 years ago, the EU introduced the Non-Financial Reporting Directive, or NFRD. Now, this introduced mandatory disclosure of a limited amount of sustainability information by companies employing 500 or more. And then, earlier this year, on the 21st of April, the Commission proposed the Corporate Sustainability Reporting Directive, or CSRD, to revise the NFRD. And the CSRD paves the way for widespread and robust sustainability reporting in the EU. So sustainability reporting has rapidly emerged from the shadows of financial reporting. And this emergence, while a long time coming, has been happening at incredible speed. Today, the debate led by the European Union is not so much about whether to have sustainability reporting, but rather the debate is about what shape and form the regulation and standards should take, and the quickest path to their development and implementation. In other words, the debate that we've got right now is about how and not whether. So Esther, perhaps you can give us an overview of the proposed CSRD.
Fine, Paul. Okay. Let me answer a few questions about the CSRD. The first one will be, why do we need the CSRD? The European Commission cites ample evidence that the information that companies report in accordance with the NFRD is not sufficient. Reports often omit information that investors and other stakeholders think is important. Reported information can be hard to compare from company to company, and users of the information are often unsure whether they can trust it. Problems with the quality of sustainability reporting have knock-on effects. It means that investors lack a reliable overview of sustainability-related risks to which companies are exposed. Investors increasingly need to know about the impact of companies on people and the environment. More generally, if the market for green investments is to be credible, investors need to know about the sustainability impact of the companies in which they invest. Without such information, money cannot be channeled towards environmentally friendly activities. Finally, problems in the quality of reporting create an accountability gap. High quality and reliable public reporting by companies will help create a culture of greater public accountability. In sum, The proposed CSRD aims to improve the incidence and quality of sustainability reporting. Another question would be, what is the scope of the CSRD? The proposed CSRD could extend the scope of the NFRD to all large companies and to all companies listed on EU-regulated markets, except listed micro-enterprises. It could, therefore, include companies with between 250 and 500 employees. Some 50,000 companies would be in scope. It could not, however, introduce any new reporting obligations on small and medium-sized enterprises, SMEs, other than SMEs that are listed on EU-regulated markets. Another question, what standards will dictate the form and content of sustainability reports? The Commission proposes to develop standards for large companies and separate proportionate standards for SMEs, while SMEs listed on regulated markets could be required to use these proportionate standards. Non-listed SMEs, which are the great majority of our SMEs in Europe, may use them on a voluntary basis. The sustainability report is expected to be located within the management report. The Commission believes that this proposal is proportionate, that is, it strikes the right balance between meeting the needs of investors and other stakeholders for sustainability information from companies and limiting the administrative burden for companies themselves. Who will set these sustainability reporting standards? This will be the European Financial Reporting Advisory Group, the EFRAG, will be responsible for developing these draft standards. Work has already started and I am a member of the project task force drafting them. How will EU sustainability reporting standards fit with global standards, especially the standards that the EFRS Foundation is planning? EU sustainability reporting standards will need to cover both the risks to companies and the impacts on companies, on society and the environment. This is the so-called double materiality principle. At the same time, the Commission acknowledges that's important that standards are globally aligned. Hence, the standards will build on and contribute to standardization initiatives at global level, most notably that of the EFRS Foundation. Will sustainability reports, like financial reports, be subject to assurance? The proposal envisages a general EU-wide assurance requirement for reported sustainability information. This will help to ensure that reported information is accurate and reliable, although the ultimate objective is to have a similar level of assurance for financial and sustainability reporting, that is, reasonable assurance. In the first instance, there will be a limited assurance requirement. Another question will be, what will the proposals cost companies? The Commission's proposal aims to reduce reporting costs for companies over the medium to long term. The proposed CSRD would imply additional costs in the short term for companies within its scope, but most of these companies will face an increase in cost anyway, because of the growing demand from investors and other stakeholders for corporate sustainability information. This problem is exacerbated by the existence of several overlapping standards and frameworks and inconsistent information requests from investors and other stakeholders. And the last questions will be, when we can expect EU companies to start reporting? This depends on the progress that European Parliament and Council make in their negotiations to finalize the text of the proposal of CSRD. If they reach agreement in the first half of 2022, then the Commission should be able to adopt the first set of reporting standards by the end of 2022. That could mean that companies could apply these standards for the first time to reports published in 2024, covering financial year 2023. So, Paul, what are the implications of these developments are for Europe's small and medium-sized accountancy practices, our SMPs?
Thanks, Esther. Quite considerable, I think, because in the coming years we can expect exponential growth in the demand for sustainability disclosure and reporting. Now, what this does is present both an opportunity and a challenge for SMPs, and this is something that we at the European Federation of Accountants and Auditors for SMEs explain in our call to action, SMPs supporting creation of the sustainable economy. Many SMEs will look to those that traditionally prepare their financial reports, and that's SMPs, to help prepare their sustainability reports. Some will seek assurance on these reports, and SMPs can render such assurance services. And some, if not many SMEs, will seek guidance from SMPs on how to transform their business models to be sustainable. Now, to capitalise on these opportunities and address the challenges, SMPs will need to build the capacity to prepare such reports, to provide assurance on it and offer the advice. So, Salvador, what steps does EFA believe professional accountancy organisations, our members and their SMP members should take?
Thank you, Paul. First and foremost, we European Federation of Accountant Auditors urges professional accounting auditors to create awareness of the reporting change in the European Union and globally. Second, small and medium-sized practitioners need to embrace the fact that the future of corporate reporting is sustainable reporting and start to plan for this. A good place to start is to visit our website, www.efaa.com. Check out the dedicated section of SMEP supporting sustainability. You can read there a good document, good information, and of course, please read our guidance. We are the author. What SMEPs and SMEs need to know about sustainability reporting. You can then start talking to your clients about what's coming. Thanks for listening.